Rohit, my main question watching this IPO is what is this company really going to be when the dust settles? Because so much of the surge in growth had to do with a kind of risk-chasing activity that even Robinhood doesn't seem to expect to continue, especially when they're talking about savings and retirement accounts.
Hey, look, I think all the fintech companies want to chase a couple poster childs out there, be it Square or PayPal. They want to use their user base, engagement with those user bases to add on more layers to growth, add on more layers of monetization. Robinhood has trading as their first foot in the door. They are adding crypto, cash management, 401k, IRAs, what have you. Whether they will be successful and how that translates to monetization is to be seen. I think there is going to be a lot of choppy trading near term, John. I feel similar to many of the recent fintech IPOs, be it Coinbase, Marqeta, Affirm. There's going to be near-term choppiness. But if you are a believer of how millennials would behave over the next, call it 2 to 4 years, then there is probably opportunity. But near term, I think a lot of people on Wall Street are going to be wary of this.
So, Rohit, the company is talking a lot about IRAs. They're talking about encouraging financial literacy, investors to hold on for a longer term. But that's not how they make money, right? Their revenue comes a lot from crypto and options traders. Do you think that investors considering this IPO understand that dynamic? Is it sort of conflicting for Robinhood to talk about these trends, longer term holding, when they do make a lot of their growth through shorter term trading?
Yes, as in there is definitely there are two issues here, in my opinion. One is like a perceived conflict of interest, and then there is a perception of lack of disclosure or lack of transparency. I think if anyone saw the roadshow on Saturday, CFO tried to answer that without giving a very clean answer or giving a very clean explanation about what the future business model would look like if payment for order flow comes under more scrutiny. I think in the meanwhile, I feel a lot of believers would want to hope and pray that there is no clear disruption in the near term. So that is what bulls on Robinhood would have them believe, as in payment for order flow and the unit economics. They get about 2.5 cents for every $100 order. If you believe the argument that this is a good thing for small ticket orders, which otherwise would have costed a lot more than 2.5 cents for every $100. So I think near term, I think you need to believe that there is no disruption in payment for order flow. Longer term, let's hope and pray that they add more levers of revenue drivers.
Yeah. Rohit, you've done some work here. You point out that they're coming to market at a time where the street is really building in models that look at serious deceleration in comps among its peer group. And I wonder how you think that might affect early trading once it comes public.
In my opinion, I feel people need to model in serious deceleration for this company too. Add to the fact that they have Dogecoin and crypto in there. For example, almost 10 to 12% of the revenue is coming from a single currency. So I feel as you look ahead next couple of years, this is probably going to lapse significantly tougher comps. That's going to add to sentiment reversing on the stock a little bit. So long as you can look through that tunnel, I feel right now people may not be willing to look through that tunnel of sentiment reversal to a certain degree. So again, right now we feel that this company, if this company grows more than 20% next year, if they can provide some level of confidence that they can do that on top of very tough comps right now, then this is a buying opportunity at the IPO price. Right now, from what we see, it is going to be a very hard sell.